Let's begin with inventories. Yesterday on the close, the API reported a large, unexpected build in crude inventories, up 3.5 million. WTI came off in reaction, but never took out the lows. Does this speak to how, while inventories are on the minds of traders, trade talks continue to be the deciding and determining factor?
Yeah, trade talks are in the background and continue to drag the global economy and some of the demand lower. And as we've talked about for a while now, U.S. continues to produce an awful lot of oil for the export market and is the pricing king, if you will, in the energy market with the amount of crude that we're producing. So the inventory levels, we've got the supply-demand function going on, a lot of supply, demand's coming off a little bit here, even as we get into the summer drive season. So I think, we talked about getting down into the mid-50s. We're down into the low to mid-50s. I think fair value is about here, so we may bounce around here for a little bit before we see what the next direction may be, whether we talk recession, lower prices, or we start to pick up growth and we start to see demand pick up and we get back up above $60 a barrel.
Paul, amidst all the other concerns that we hear about as crude has come off a recent high, 66.60 in the Brent, should we be concerned to see inventories rising at a time when refiners are and, should be ramping up production to meet summer driving and summer driving season demand?
It is a concern, but as I mentioned, I think the driving force is that the U.S. is still producing. Refinery capacity is up north of 90%, so they're going pretty flat out at this point. We haven't seen really much in the way of a decline in refinery. But again, I think it's really a U.S. story as far as production goes, and we're producing as much as we can to keep those energy prices low, which has really been the goal of the administration since they came into office.
Yeah, so you're talking about production here in the U.S. I'd imagine that the next real focal point for crude traders is going to be the OPEC meeting and what they decide in terms of production later on this month in the June meeting.
Yeah, and we heard from the Saudi oil minister earlier this week and also from the Russian oil minister. Both have said Russia is a little bit perturbed that the prices are where they're at and that they have to cut production. Obviously, that's one of the big revenue sources for Russia. But Saudi Arabia has indicated, they're going to try to do what they can to stabilize energy prices. So that may mean further cuts in production. Obviously, Saudi Arabia is a little bit more able to withstand those cuts than some of the other countries, especially Russia. So it's going to be maybe a little bit of a contentious meeting, but I would expect them to reiterate the production cuts, maybe a little bit more in the way of cuts in order to try to get oil prices to stabilize here.
Yeah, Paul, in addition to their comments, we also had comments from Bullard. I'd imagine that, pointing towards lower rates and a weaker dollar, in theory, that should be somewhat bullish or at the very least support crude prices at current levels.
It should. And again, we didn't really see much of a reaction in the energy market yesterday. They were really focused on inventories. It traded lower all day yesterday and certainly took a leg lower after the inventory numbers hit. That's a longer-term story. The dollar has come off of its recent highs, but still trades relatively close to the highs. We'll see what happens here. The reading in the tea leaves with the Federal Reserve, we've got a lot of governors speaking yesterday, today, and tomorrow before they shut it down ahead of their FOMC meeting later on this month. So we'll get a lot more from Fed speak today and tomorrow. But I think most of them are starting to signal that, yeah, we probably should back off here a little bit, maybe even cut rates at this next meeting.
Paul, I hope I'm not backing you in a corner here, but I've been hearing about wildfires in Canada and how they're impacting crude production there. I'm wondering how closely you've been following this.
A little bit. Certainly it's an odd season for the wildfires. Usually this happens in October, November in Canada, so it's unusual. Yeah. It's also put the heavy crude up about $3 or so a barrel. So it's had some impact. They've shut down some of the production in some of the areas where it's being impacted from the refining and so on. Mm-hmm. Again, it's the heavy crude. Yeah. It's not one that gets used a ton. And certainly, our focus is generally on Brent and light sweet crude. But yeah, those prices are significantly higher here.
Paul, let's talk about natty gas. New lows for the year yesterday. Many think unless we see some major heat coming soon, we could test that $2 level.
Yeah, we could touch the $2 level. We're actually at the lower level of a range that goes back to 2016, outside of the January, February lows in 2016. So there should be some support right where we're at here. We get much below this and we can get down well below $2 and maybe get close to that level that we saw early 2016. Again, not a lot of support for natural gas at this point. Natural gas inventories are building. They're probably about 10 to 15% ahead of year-ago levels as we're doing our normal build during the summer months in preparation for winter. But yeah, so as we are in the crude oil markets, it's a supply-demand issue. A lot of supply, not as much demand.